And finally, Mizuho analyst Vijay Rakesh raising his price target on Nvidia to 127, noting the company's continued AI dominance. Vijay saying this: Nvidia continues to see strong opportunities with the Hopper, Blackwell and Rubin platforms announced at Computex for 2026. Its 10-to-1 share split should create a more attractive entry point for retail investors and could provide additional share tailwinds. Vijay joins us now for more. Vijay, I just want to start with that final point, and thanks for joining us again, sir. Why is that important? Sort of the equity market snobs would sit around this table, Vijay, and say it doesn't matter, it doesn't change anything. What do you think it changes?
Yeah, thanks for having me on, John. So on Nvidia, our price was 1275 pre-split. So, the 10-for-1 obviously accounts for that. Now, I think it does not absolutely change the intrinsic value of Nvidia. But what it does is it makes it much more accessible for the retail side of the investing platform. So obviously, a $127 price target, 150 price target that we have, or post a 10-for-1 split, it makes it increases liquidity, makes it a lot more accessible to retail. And I think that is obviously an attractive proposition that management sees. And that's also a vote of confidence, because I think this is probably the second or third split that they've done in the last 5 years. So,
do you get the sense that other big tech companies are watching this in terms of doing their own stock splits going forward?
I think it's very plausible. I think, obviously, when you increase, there is so much retail participation in the market these days. When you increase the liquidity on the stock, obviously makes it much more accessible. It improves the trading environment, I guess. So, but like we said, it does not change the intrinsic value of the company. The fundamental DCF or any valuation you do kind of stays the same, but just improves liquidity, improves accessibility for the retail side. So.
There have been a number of papers recently written about whether Nvidia is a bubble, at what point it could be a bubble, at what point it could fuel a bubble in other big tech shares. A lot of people making the counter argument that it's actually generating boatloads of cash, so it's not really bubble-icious. How do you understand, what's your parameters of really gauging when enthusiasm has gone beyond the realm of possible and likely for a company that seems to be going through the moon, shooting for the moon, but it can't continue forever?
Yeah, I think two key things to watch. I mean, if you look at AI penetration in the server side, it's still less than 10%. It's still about 10% of the market. So there's still a long ways to go in terms of AI adoption, not just at the cloud, CSP level, not at the hyperscale level, but back into enterprise and in a lot of other markets. So there's a long ways to go in that adoption. Number two, when you look at the whole AI market, it's almost a $1 trillion market today, and about 250 billion of that is, you'll see about 250 billion a year of basically brown scale investment, basically upgrading existing infrastructure, and an additional 250 billion of new AI investments. So that's about 500 billion a year of AI investments that are going to come through. And I would say also, don't forget, when you look at Nvidia itself, number three, I would say, what they're selling today is Blackwell. That's only a $50,000 ASP product on an 8 GPU server. They are going to full stack servers in 2025, where the ASPs or the selling price of these servers are in the 1.5 to 3 million. So a very significant increase in their selling prices, and that'd be a big driver for the top line. So there's a long ways to go on this story. So.